So now, what about the interest rate? Everybody talks about the interest rate and getting the lowest interest rate. How do you approach that with somebody? Because now there's more variables and there's more options. I guess you try to find the best rate, or is it how?
Well, as part of what we do, we have more options, like Anza mentioned, and we want to get the client the best rate. But the best rate statement should not be used out of context, because it's the best rate for that particular client. It's based on their situation. It's based on the lending guidelines that fit their situation. So let's say there's a marketing campaign out there that says the best 5-year rate right now is 2.89 or 2.99. We get calls from clients who say, okay, I want the 299 or I want the 289. It all boils down to qualification, and if that client will be approved for such a rate. And it all depends on 3 things: their credit, their employment, okay, and their income. And are they gonna fall within the guidelines of that lender that is offering that particular rate? So that's one thing. Qualification is one thing.
And we talk about too is that right now with the changes, and we always keep reverting back to the changes in guidelines because that's very crucial. Even though a client may call you and say, I want the 299 rate, that is not the rate that you're qualified on. The rate is based on the benchmark Canada, the Canada Mortgage and Housing benchmark, the bank benchmark. So right now the bank benchmark is 5.24. Even though there is a rate of 299, it doesn't necessarily mean that you may qualify at that 299, because that's what's called a teaser rate. And those teaser rates are not necessarily allowing you to qualify for it. So people, clients have to understand.
That's the extra best rate.
Yeah, that's the best rate, but it's only to the best of the qualifying process. So with both Dahlia and I, when we get this question asked is, what is your best rate? We don't answer it to the rate. We answer it to, can we help you understand what you mean and how to position it so that it allows you to give you, we quote your rate, because quoting a rate, people always remember a rate, but it's being able to qualify for that rate that's very important.
And the other thing is, read the fine details, the fine print, because it may be great. It may be great. It may be great to get the 299 rate, but what does the fine print say? Is it actually? Are you locking yourself in, and there is a hefty, very hefty penalty of getting out?
That's right.
Is this the right strategy for you? If you're a real estate investor who's buying a property and you want to flip this property in a year from now, and then you locked yourself into a 5-year 299, it's a fantastic rate. But guess what? When it's time to exit, your penalty is going to be extremely hefty.
Yeah, exactly.
And some of these mortgages are completely closed. You can't get out. So it's very important for the client to read the fine details behind the rate and the cost associated with acquiring that rate. Because when you go seek financing, it's important to look holistically at everything from your prepayment options to your ability to pay that mortgage fast, to the savings on the mortgage, to your exit strategy, to the costs involved, if there is a lender fee, if there is a broker fee, and then crunch the numbers and make a decision. Because there are times where a 3-point something rate is better than a 299 rate if you factor all of the things that we just talked about.
Exactly. And our approach to our investors and to our clients is, what is your strategy? Are you planning to hold it for 2 years, 3 years? Are you planning to flip? Are you planning to stay? A lot of clients, we also do some recommendations, and the recommendations are maybe a 2 or 3 year product that allows you to get the benefit of the lower rate and allows you to be able to exit strategy at that point. So it's all about us understanding your needs and knowing how to position your needs on how to exit your needs.